Okay, I want to continue this conversation about oil and its pricing. And I want to debunk this whole supply and demand stuff that's going on. And also want to kind of head off something the Fed may try to do with oil. But let's use an analogy here. Let's say that I have a dough factory and I have a retail donut store. Okay, so my dough factory, this is where I'm making the dough, and I ship it to my retail store. Let's say when I open at 6 o'clock, I open my retail store at 6 o'clock, I've got people lined up all down and around the block ready to buy my donuts. Okay, that means that I have significant demand for my donuts. Okay, now, if I'm able to increase my supply, then that's fine. Then pricing will stay neutral. In a normal business equation, if the demand goes up, you create more supply so you can meet the demand. Now, if demand goes up and you're unable to increase the supply, what is the other economic factor that's adjusted? Well, the price of the donut goes up. If the demand is there, but you can't create more supply, the price is going to go up. Okay? Now let's take a different scenario. I open my store doors at 6 a.m. and there's hardly anybody there. My demand has gone down. Now, if the demand has gone down, shouldn't I, as a business person, reduce my supply? That would make sense, wouldn't it? And this is the dynamic that we need to discuss concerning oil. Demand is down. Demand is down for oil. Why? It's called a global economic slowdown. Whether you're talking about China, Europe, or soon the shores of the United States, this global economic slowdown, the demand is down. Yet what's going on? What is going on with supply? Supply is not going down. Supply is going up. If supply is going up and demand is down, what happens to your price? It craters. That's what's going on. There's not enough demand. Supply is continuing to go up, and it's driving the price down. Now, in the other video, I explain why. So if you want to go watch that, if you haven't watched that, you should go watch that video. Once you understand the why of why oil is going down, then you can understand the when. I don't know. I can't predict when that when's going to happen, but I know why that when's going to happen, and that is that Saudi Arabia is eventually going to cut their supply. They're going to cut the supply to match the global economic slowdown, and that's going to allow price to stabilize back up to that $100 a level. Okay, so I touched on this Fed thing. This is really something very frustrating to me. We know that the Fed wants to raise interest rates, right? And the two data points that they talk about the most that they're looking at is employment and also inflation. And it's this inflation figure that I want to focus on, because inflation, meaning if prices are higher, they can justify that there's inflation in the system, and that's why they can raise rates. So what they can do here, now pay attention, when oil prices start going back up, when the price goes up, why? We already established why. It's going to go up because supply is going to be cut because of the global economic slowdown. Remember, oil came down because of what I talked about in this other video. If supply is reduced because of a global economic slowdown and the price increases, how can you say that that's evidence of inflation? You can't, but the Fed's going to try to convince you of that. So anyway, I could do 10 videos on my frustration with the Federal Reserve, but as always, you can follow this link to go to our landing page to get our monthly alert or our 6-month position paper, and also to watch the other videos. So I hope this makes sense, and I appreciate you watching. Thanks.